There will absolutely be another banking crisis. If your bank is closed, not for just a day or a week, 2 weeks, 3 weeks, whatever, then people can't eat because they can't use the money, so they won't use the money. So they'll use something else. That literally means that your dollars are now worthless. We are declaring the dollar worthless. You cannot transact anymore. You cannot have a functioning monetary system on any level if the government says, well, you can only spend $300 a day. Why didn't any hyperinflationary country do that? Because if they did, people would starve and then come with their pitchforks and their torches and bash down the parliament windows and like kill everybody. And I do think the next crisis is going to be the last one. Once that dollar no longer has any gold value, it will not buy you a damn thing. The dollar is not going to die as the world reserve currency in Forex trading markets. It's going to die in the streets of the US. Horrible things are happening, and I'm seeing division and hatred and fear-mongering and this crazy behavior. The path is short either way you take it. I just hope we take the path that the least amount of people die. If they don't have the money, then it's every man for himself, and the government itself collapses. They're running out of money. They're becoming poorer and poorer, and they become more desperate. So you latch on to crazier and crazier ideas.
So how do you think CBDCs or decentralized finance and decentralized currencies like Bitcoin and things of that nature factor into this?
You could have a gold-backed digital currency. I have nothing against the technology of a blockchain or anything, right? That's all fine. What I rail against is people who say, well, Bitcoin is money because money is just whatever we agree on, and we're agreeing on Bitcoin. I've already tried to demonstrate logically why that is impossible. Bitcoin is just another dollar derivative, because when it was born, it was exchanged for dollars. It's on the top of the pyramid. It's not on the bottom. So when you buy Bitcoin, fine, buy Bitcoin. Maybe you'll make a lot of dollars off that. Maybe it'll go to $100,000 or $1 million or whatever, but eventually the dollar isn't going to be exchangeable for anything. So then what are you going to buy with your Bitcoin? Right? It's going to be nothing. So central bank digital currencies, those are terrifying things. And they would be the next layer in the pyramid where the government through the central banking system would try to exert as much control as possible over all of our daily lives, to the point where they would know every single transaction you make, period. And that itself would mean that people would be incentivized to get out of CBDCs and trade gold and silver directly to do it under the table. And it would be a great incentive for gold and silver to be remonetized because nobody wants to use this crap. Look, central bank digital currencies, they're not going to succeed because they're just another layer on top of the current derivative layer, which will make everything even more unstable. And however fast the monetary system is going to collapse, if they succeed in bringing a CBDC to fruition for any amount of time, it'll only speed up the inevitable collapse. Because once the dollar collapses, there's no difference, monetarily speaking, between a digital dollar in your bank account now. When you log into your Bank of America account, you see a number on your checking account, and you see that number, like, well, let's say it's 10,000 numbers, $10,000. Well, 10,000 what's exactly? It's not dollar bills. They don't have it there. It's just data. Mm-hmm. So what's the difference between this data and a blockchain data? Monetarily, it's the same damn thing. So it's just another way of distributing things. As long as it's based on gold, fine, no problem. But we've seen how government uses this technology to rape and pillage and kill and murder. They do that with every technology that is invented in the free market, all the way from the wheel to blockchain. It'll be used for good. It'll be used for evil. And, I don't really see much future in it. I'm not a big fan, but it's okay.
So what are your thoughts on Bitcoin as it emerged, just not really overnight, but, some people, like our mutual acquaintance, Lynette Zhang, think it was Wall Street fabrication of sorts, or another method of subtly trying to control the population by making them think that they're empowered and think that they're taking away power from the system. Because like you're saying, most people, like Bitcoin purists, will think, oh, this is the base of the pyramid, but you said it very simply and succinctly that no, it's actually the top of the pyramid, that final layer, really.
Okay, so answer the Lynette Zhang point. I really appreciated talking to her. I was on her show recently. We had a really good conversation. So what Lynette is saying is it a deliberate attempt to distract the gold bugs? Because the gold and silver bugs, the ones that stack physical coins somewhere, whether it's under their bed or in some kind of vault somewhere, wherever they put it, if you picture the pyramid as an actual pyramid, when you buy a gold coin and you put it on your mattress, what you're doing is you're hacking away at the base of this thing, right? You're literally cutting away the gold base and you're putting it on your mattress and you're dumping more dollars on top of it and you're trying to push it over. That's what you're doing, and that's what we should be doing. Because the quicker we collapse this thing, the quicker we will be free of it, and we'll have to go through the shitstorm. I'm not saying that's not going to be hard. It's going to be hard, but it'll be easier than what we'd have to go through if we live through this any longer. Mm-hmm. So Lynette Zhang, or anyone who agrees with her way of seeing it, I don't think it's necessary to see this as a premeditated sort of thing, because if you look back in history and there was an invention, let's say, I was talking about the wheel, or the heavy plow, or the longbow, right? It was these sorts of things were invented by some private inventor somewhere, or the horseshoe, right? The horseshoe allowed horses to travel a lot more, so it allowed people to trade more goods and services. But then the government came in, or some king somewhere in Europe said, you know what? Well, now that we have horseshoes, we can go to Asia and kill a bunch of people, right? That's what they do with every technology. It's not like the inventor of the horseshoe was trying to give with power to who's that Mongolian conqueror, Genghis Khan, so he could conquer the whole world. He wasn't trying to do that. But every technology that comes up, government eventually usurps it for itself to rape and pillage. And that's throughout history. So look, maybe Bitcoin was a distraction. Maybe it was just something that Satoshi Nakamoto made, whatever that thing is. And he had a real idea. And whatever the reality is, it is a distraction. That's for sure. It's good in the sense that it's waking people up to the vagaries of the monetary system generally. But if you can't see that Bitcoin is just another product of trying to get away from theft, but that it's on the top of the pyramid, not the bottom, then I don't know what else to say to you. Well, at least just while you have your Bitcoin, just try to help us out and get some gold too. It would really help.
So you think that if more people started to get into gold, it would crash the market faster, and the sooner we crash the market, the less the tyranny is going to be when we ultimately get to this end game stage?
Yes.
Do you think they're trying to artificially suppress the price of gold, and how are they manipulating the price of gold? And we probably should have talked about this right out the gates, because there's probably some of my audience that doesn't understand the difference between the spot price of gold and the true price of gold. You briefly talked about it, but is there an attempt? Maybe what I'm asking is, how is the gold price manipulated to keep people from wanting to buy into it?
Through gold derivatives, mostly. So how the main gold derivative in the world is a gold futures contract. And this futures contracts are for the purpose of hedging for companies that, produce commodities. They make sense, right? So oil derivatives, let's say ExxonMobil is gonna sell a bunch of oil derivative contracts so that they can lock in the price for their oil that they're going to dig out of the ground, right? And then they can deliver the oil into those contracts so they can know what they're going to be able to sell their oil for, right? That's why commercial companies are generally short the commodity that they sell, right? It's to lock in prices. Now, how gold is different from other commodities is that there are two prices to it. There's the commodity price of gold, but there's also the monetary price of gold, right? Gold is really the only commodity that everybody needs at all times, because everybody needs money to be in the division of labor. They don't use the actual physical metal. They use the derivatives, which still sort of represent the gold, but not really. So there's all these people sometimes talk about the manipulation of the gold price by JP Morgan, let's say, selling a bunch of contracts at 7 a.m. and smashing the gold. That happens. That's true. That happens. I don't think that's a big deal, though, because that's only a few minutes of trading, and it discourages people for a few minutes, or maybe a few days, a few weeks, whatever. But really, the fact that the gold derivatives price, the gold futures price, is basically representative of the price of gold as a commodity. Let's say you're a computer chip maker and you need some gold to like finish your computer chips for whatever you need them for. So there's no shortage of gold for that. But the futures market is not designed, it never was designed to reveal the monetary price, because really everything on the futures market should be trading in units of gold ounces, not in dollars, right? What if gold is the money itself, then the futures market collapses, because then nobody will want the dollars. They'll just want the gold. And then the dollar price of gold goes to infinity. And instead of trading dollars for commodities on the futures market, you're trading gold ounces for commodities. And in that sense, no gold miner needs to hedge against gold production, because gold is the money. And when it costs more gold ounces to dig ounces out of the ground, let's say it costs 100 ounces to dig 90 ounces out of the ground. Will you do it? No, right? If it costs only 50 ounces to dig 100 ounces out of the ground, you'll do it. So what do you need to hedge for? Right? It's the futures market itself that is the manipulation of the gold market. And once the futures market collapses, that's a default on the futures market. And that is the monetary price of gold, which is the exchange rate between every gold derivative in the world and all the available gold supply. Whatever that number is, 50,000, 60,000, 70,000, that's the price. And that's when the gold futures market dies.
So let's say we're not giving anybody financial advice here, but if you theoretically say we're going to put a proportion of your wealth into gold, what would you do?
So the way I do it is I think that number is different for everybody. I don't think there is one number. It's basically whatever portion allows you to sleep best at night. If you understand what I'm saying, and you understand that gold is money right now, that when you exchange a dollar, you're really exchanging the vestigial gold value of that dollar. And once that dollar no longer has any gold value, it will not buy you a damn thing. And you're going to need some money. If you understand that point, then imagine how much gold you have wherever it is. Whatever that amount is that allows you to sleep best and happiest and have your wife and your family content, or your husband and your family content, being able to weather, if the monetary system collapses tomorrow, I will be okay. That's the proportion that you need. If it's too much and there's like a liquidity crunch before there's an end game and gold goes down, which does happen sometimes, and you're like leveraged, which is a bad idea, and then you have to liquidate because everyone's in a dollar crisis, that's probably a bad idea. Don't do that. And if you can't handle the swings, then you should have less. And if you can handle them and they're okay, then you should have what you have. And if it's too stable for you, you want to see some more action, you should have more. That's all. So I'd say like a minimum should be, if you really want to be okay, is at least 5-10% something, and that's what I would do. But everybody's different. I don't know. I can't give any personalized advice.
Well, and maybe what do you think about this? Because you often talk about how the true price of gold is how it's denominated amongst all the assets in the world. So if that's 30 times, and even in the very least having like 1/30th then of your wealth in gold would ensure that if the worst case scenario unfolded, you would be able to, in the very least, retain kind of what your purchasing power.
It's probably even better than that, because that's a mechanistic way of thinking about it. Like, so if the value of the dollar goes up 30 times in dollars, if the value of gold goes up 30 times in dollars, I'll have 30 times the purchasing power. It's not even that, really. It's much more than that. What happens in a currency collapse is that the economy desperately, more than anything, needs a money for the purpose of a division of labor, because otherwise, we're really in a genuine Mad Max situation. I think we'll have spasms of Mad Maxiness. I don't think we're going to be in a prolonged situation where everyone's just shooting each other and zombies. I hope that's not going to happen, because I think that when that is threatened, there will be such a burst of gold and silver into the system that it'll be prevented. But in that initial stage where everything collapses, gold and silver will be so valuable in terms of other goods and services because the priority for everybody will be to get it so they can continue their division of labor status, that it will be able to buy you phenomenal amounts. I mean, phenomenal amounts of goods and services, mostly capital, entire factories. You could, I talk about this a lot in Weimar. Foreigners would come in with $100 bill, and an ounce of gold was $20.67 an ounce. That was the statutory rate, and it was pretty stable. So foreigners would come with a $100 bill and buy a house in Berlin, right? So that's about 5 ounces of gold at a 15-to-1 ratio. That's about 75 ounces of silver. You could buy a whole house with that. Who knows what other stuff you could buy? It's going to have a lot more purchasing power in the initial stages, and then it's going to decline, right? As gold and silver circulates more and more, it's going to be less and less valuable in terms of purchasing power. But if you've got, let's say a 30th of your wealth, and you have $1 million, $1 million divided by 30, another math, whatever. If you have $10,000 worth of gold, you should be able to buy a lot with that, a lot of capital.
Well, and I think we have a distorted understanding of the price of things, because with the housing bubble as it is, people have convinced themselves that a condo in Vancouver is worth $2 million. When in reality that the physical materials that were required to build that thing were probably, only a few $1,000s. Do you think that the value distortion that happens in these derivative-based markets is that maybe that's what that is, that it's just that our sense of what is cost a certain amount is so distorted and inflated that what you're actually getting there is the true value of it?
Yeah, well, look, all you have to do, and you can plot this, instead of you would plot, let's say, the Case-Shiller housing price index or whatever index you want, put it in Excel, and then divide it by the price of gold or the price of silver. You'll see that over time, there's fluctuations, but the general trend since 1960s is that housing prices have fallen, pretty dramatically and steadily over the decades. And it's the same with almost everything. In terms of gold and silver ounces, almost everything has fallen, with the exception of maybe the extremely inflated sectors like college education or something. But almost everything else has fallen in terms of real money. So in a hyperinflation, everything becomes extremely cheap in terms of real money and extremely expensive in terms of money derivatives. So let's say you're a long distance runner or even a sprinter, right? And you're doing like a 500-meter race. So you basically know how fast you have to go and how much energy you have to exert. But remember, a dollar was, by definition, a dollar was a certain weight of gold and silver. That was money, the weight. Now, if you keep changing that weight, it's the same thing as changing what a meter is, right? In distance. So let's say they make a meter like 2 meters now, and then you're running what you think is a 500-meter race, and now it's a kilometer. So you're really tired and you're not doing as well, and you don't know why. But they changed the definition of a meter. So it's the same thing as changing the definition of a dollar. And what's changing the definition of a dollar do? It warps prices, just like, changing the definition of a meter would warp a race. It's the same thing. It's just hard to think of it that way for most people, but that's what it is. That's what it is. We're changing the units. It's screwing with people.
What do you think about the actual gold scarcity? So if there's 200,000 tons above ground mined gold and only 50,000 tons left, as far as we know, if this Uganda story is, blown out of proportion with something like the equivalent of all the gold ever mined in existence in the ground, according to their surveying. But if that's not true, which we can assume that is probably exaggerated, but because gold is becoming more scarce and harder to mine, wouldn't that necessarily then just increase its value even more?
Yeah, it will. Look, the great thing about gold, also silver, but more gold, why it's one of the reasons why it's such a good money, and there's so many reasons why it's near perfect. There's no such thing as perfect money. There's no such thing as perfect anything, but gold is the substance that is the most perfect for a global economy as a money. And one of those reasons is that the more technology we have to feed ourselves, right? The more people exist, the more know-how we have, includes know-how on how to mine. So even though the gold supply, the gold stocks have depleted as we've mined them, we've improved, with our growing population because of growing technology. We've also grown the ability to mine more, and we have techniques now that they couldn't even dream of back then, in terms of chemical extraction of like dust to get all this gold. I don't know much about mining technology. I just know that we keep mining more and more and more every year, and it's slowed down a little bit, yeah. But that's mostly because the price of gold is so suppressed now that it's not profitable to mine it at these prices. But assuming it wasn't so price controlled through the derivatives market, we could probably keep mining it for a while with newer and newer techniques. Malthus, with his population theories of geometric rate versus the arithmetic rate of food production. Well, he didn't understand that the more people, they can grow more food because we have more technology. So maybe it'll be the same thing with gold. But even if it isn't, even if we weren't able to mine more gold, and let's say we mined every last atom of it, then it's still good money, right? And it would rise slowly in value as there are more and more people and more goods and services. Because if you have a static gold supply and you have a growing goods and services supply, then those goods and services get traded for lower and lower amounts of gold. So the gold supply doesn't matter. Prices adjust to it. Whatever it's worth, it's worth. I just know that it's the money because that's where monetary exchange comes from.
How do you, as a religious person, reconcile these two things? Gold being the kind of base level means of monetaries, but at the same time, like the root of all evil in some ways, because it's people are motivated to do such, go to such extremes and fight over it, and so how do you reconcile those things?
Well, lucky for you, I have thought about this problem for quite a long time, and I have what I think is a good answer.
Okay.
Okay. So the point of the Hebrew scriptures is to keep the spiritual world and the physical world separate, but running along the same frequency. So we're in sync with God, and God is in sync with us, but never to cross the two over, right? What the Bible, what our Jewish Testament is really fighting against is derivatives. Same thing as gold derivatives, right? And how do I know this? I mean, the main sin in the Bible is to bow down to a statue as if it's God, right? But then you can ask the question, how the hell did that happen? How was it that people were so stupid as to make a statue and then say, oh, well, you created me, and then bow down to it? It sounds ridiculous, and it is ridiculous. But how did it happen? How did it happen? And Maimonides, he's a 12th century Jewish philosopher, very, very big rabbi, one of the biggest, one of the most respected on all of history. He goes into the history of how idolatry came to be, right? How did it happen? Well, somebody way back in Genesis, his name was Enosh. He decided that, God created the stars, and, God's a little bit too far away and I don't really understand him. So I'm going to ask the stars for help, and they'll tell God what to do. And the stars will relay my prayers to God, right? That's the first derivative layer. And in a religious sense, every derivative layer that you go becomes more and more physical. God is the ultimate spirituality. And then you go to the stars, which they thought were like spiritual beings, but they're physical. We know they're physical, but they thought they were spiritual. And then somebody said, the stars are too far away. Too far away. I'm going to make this ball that looks like the star, and I'm going to call it XYZ, and I'm going to put it in this temple, and I'll bow down to this thing, and then the star will know that I'm respecting the star, and then the star will ask God to rain on my crops, okay? And then what happens generations and generations later? A kid walks into one of these temples, he sees people bowing down to a rock, he says, oh, that must be God. And then, no, it's a derivative of a derivative of a derivative of God, right? But in the monetary, every derivative layer you go becomes more and more physical. So what's the ultimate sin? The ultimate sin is to take the physicalness of gold, which is not God, and say, you're God. Do not do that, okay? You cannot do that. But at the same time, it goes the other way around, right? You can't take money, which is supposed to be physical. It's supposed to be in your hand, right? And then make it. You can make a derivative. I'm not saying the Bible says don't make a derivative of gold, don't make a receipt for gold. But But in the same way that you should not confuse an idol for a god, do not confuse the dollar for money, right? You go from gold, then you go to paper, which is still physical, but less so. And then you go to deposits, which are like promises on paper for other promises on paper. And then you go to digital, and then you go to stocks and bonds. And in the end, what do you have? Bitcoin, which is literally nothing. And call that money. That's the ultimate monetary idolatry. But gold itself, if you look in the story of Eden, in the Garden of Eden, before man is placed in the Garden of Eden, there's these random verses right before he's put in there in chapter 2 of Genesis, where it says, and this is where Eden is, and there's these rivers, there's 4 rivers that are feeding Eden, and one of them is in Eretz HaChavilah, where the gold is. And the gold of that land is good. Anyway, God put man in Eden, and then all this stuff happened. Like, what are those verses doing there? I'm not giving you the answer, but it seems to me that God is putting all of creation together. He's putting all the ingredients there that man needs to survive in a society. And gold is one of them. And you need it before man exists. Like everything that we need on this planet is here. Stop with the derivatives, right? Physical is physical. Spiritual is spiritual. Try to make the two as close as you can. Never, ever cross them. Don't cross the streams, right?
You talk often about how you think that CBDCs are bad because they're the ultimate method of control. Bringing us back to the material realm of things, how do you see CBDCs playing out? Do you think that that's going to be the next step of all of this? Is that how they're going to get us out of the next crises?
So CBDCs, as terrifying as they are, what they are not, they are, again, they would be a layer on top of the pyramid. So they would not be a stable island of evil where, let's say there's a monetary crisis and then everything's collapsing and they say, okay, now we're going to go to CBDCs. Everybody calm down. We're going to replace all your dollars with now the Fed coin, and now everything's going to be fine, right? That move itself is not going to stabilize a damn thing. That's not what stabilizes anything. That destabilizes further. So there's no island of stability where CBDC would be the savior that would stabilize a pyramid by making it bigger. Like you can't fight debt with more debt. You can't fight derivatives with more derivatives. CBDC will not stabilize the pyramid. It will cause it to collapse even faster. So will they try? If they really wanted to institute CBDCs, they should do it in a period of calm. But I don't think we're going to get that period of calm, judging by the fact that we have a senile administration run by who knows what kind of evil forces beneath. A nuclear war with Russia, God forbid, looks like a semi-realistic possibility. I mean, Tucker Carlson was just talking about this. That's what he thinks is going to happen. I hope not, because I really don't know what to do in the event of nuclear war, but I'd say don't worry about CBDC, because if they really were going to institute it, they haven't even been able to ban cash yet, and that's going to take years, from now anyway. It's on the way, but there's fights, and that's going to take years, and CBDC on top of that, I don't see that they have time to do this by the time the next crisis hits. And I do think the next crisis is going to be the last one, just because of the curve of the money supply, right? In a fiat system, what we call a fiat system, and I already don't believe in true fiat, it doesn't exist. But in the debt system, the debt has to increase at an exponential rate, because the more debt derivatives that exist, the more dollar bills that exist that are representative of debt, that grows the financial system, and then more people need those dollars to finance their own debt, which need more dollars to finance their own debt. So you need to keep growing higher and higher and higher. So we're already at the vertical stage now. So one final crisis should do it. And I think that's at most 2 years away. And we could get into why 2 years, but it's not that important why. I don't see them having enough time to implement CBDC in a way that it would really start circulating and ruin all of our what is left of our freedom.
Well, now that you brought it up, the next 2 years, what sort of black swans do you think might cause the system to just topple over?
Well, we saw one in the regional banking crisis in March, where banks just started to collapse, and the solution to that was give us all your toxic assets. It was the same with the housing collapse in '08. It was like, give us your toxic mortgage-backed securities and we'll hold them in the Fed. In this case, it was just give us your toxic treasury bonds and we'll hold them in the Fed and we'll give you dollars instead and we'll take the loss. So it could be another banking collapse. It's going to be a banking collapse eventually. It could be China. It could be Russia and America going at it directly, which would create a true panic. Or, what are they saying? There's aliens now. Could be that. It could be that for all I know. But it's going to be some kind of it's probably going to be some stupid financial event that none of us saw coming, that leads to something else. And Japan will be involved and China will be involved and all the holders of treasuries will dump them all at the same time so they can get whatever real assets they can. The hyperinflation is going to be very quick when it starts. It's going to be lightning quick because in Weimar, they still were limited to how fast they could print money and then how fast you could run to the store with your legs and then dump all these bills onto some poor shopkeeper and then get stuff, right? That takes time. But how much time does it take to click a button and then, buy a house or buy something on Amazon or buy anything? You do it in a fraction of a second. So the hyperinflation could be really, really be that quick. I don't know exactly how quick, but it could be one day. One day we're at $2,000 gold. The next day we're at $60,000 gold and everything just falls apart. It could be that quick.
Well, we've seen that with the digital bank runs, right, back in March or April, whatever it was. So yeah, I could see that happening on a global scale. Everybody quickly trying to get out of dollars by doing online transactions even. And just, overnight that the price of things, the scarcity reaches a point where there's so much demand because everybody's trying to get out of dollars that the price of everything just skyrockets digitally overnight.
It could even be that this happens and then the Fed shuts down the entire banking system and says, look, everybody calm down. And, don't just like they have circuit breakers on the stock market, if price moves too fast in either direction. It could be that serious stress on the global banking system will just cause all central banks to call each other up one night and say, we're going to shut everything down. And then they'll make an announcement and say, all the banks are shut down until all you guys calm down. And then everyone's going to be like, okay, well, screw you. I'm just going to use whatever cash I have into the mattress or start bartering. And then maybe at that point, the gold and silver people will come out and say, look, I'll buy whatever you got. I got coins. Maybe it'll happen like that. I don't know. But I'm saying they'll try to control it. They'll try to prolong it. At some point, they will not be able to.
I think you're right, because I think that's exactly what they'll do. When I was talking about a pandemic in 2015, it was one of the first few series of videos I made on the channel that the most likely global catastrophe is going to be a pandemic for a variety of reasons. It just seemed like the most obvious thing that was likely to happen. But I never in a million years could have predicted the level of authoritarian control. I mean, when they first said that they were going to shut everything down and go into lockdown, I was like, wait a minute, I never, I thought that it was just run riot and, I didn't foresee the extent of the authoritarian crackdown. I think what you just said is exactly what they're going to do. They're just going to try to shut everything down, and it's going to be this lockdown, but from a monetary standpoint, and that's going to force a lot of people. I think because people are so complacent, it might slow things down more than we think. But yeah, there's probably going to be that group of people who are trying to transact in their own ways, and who are forced to, and maybe this will stop the bleeding for a while. But I don't think we should underestimate the government's ability to go to those lengths to put the brakes on things.
Let's say they do. I mean, let's say they announce, like Nixon announced, the dollar is no longer convertible to gold. Whatever president comes up and says the entire banking system of the entire world is shut down. Well, logically, what does that mean? That literally means that your dollars are now worthless. We are declaring the dollar worthless. You cannot transact anymore. Okay, that's what they're saying. But that's the same monetary effect as hyperinflation had they not shut it down, right? It's the same thing. It's just one's accomplished by a dictate and the other is accomplished by the people just dumping the money. But if you cannot transact, if your bank is closed, not for just a day or to try to slow it down, but if they say we're not going to open the banks until everybody calms down, so it's like a week, 2 weeks, 3 weeks, whatever, then people can't eat because they can't use the money, so they won't use the money. So they'll use something else. It'll be the same effect as hyperinflation. But really,
I think don't you think they would put in some sort of controls? Like they would say, okay, well, you can only buy $300 worth of groceries within this, like almost like a rationing system.
okay, well, then that's price controls of everything. And you're saying that the price of your grocery bill can't go above $300. And then you're price controlling food. And then what happens? Shortages, and people starve. And then they have to use a different money to make the market clear. Right? You cannot, just like you cannot have a fiat currency, you cannot have a functioning monetary system on any level if the government says, well, you can only spend $300 a day. Like, well, why didn't Weimar do that? Or why didn't any hyperinflationary country do that? Why doesn't Argentina do that? Well, because if they did, people would starve and then, come with their pitchforks and their torches and bash down the parliament windows and like kill everybody. Like you can't do that. People need to eat.
Yeah, no, I think that's an angle I'm going to research more, because I do think what you said there's a lot of truth to that the most likely scenario is they're going to try. I'm not saying they're going to be successful, but they're going to go back to what they know best, and that's to try to overreact to a problem and likely in the process make it a lot worse. That whole doom loop hypothesis, where the cure is worse than the actual disease itself, as we all know. In terms of inflation, then, how do you think that is, like, you talk about how it's going to happen rapidly? Because not all of my audience is well versed in like the basics of economics, but I think they generally have a fairly good grasp, as much as I do. Many of them have a better grasp than I do. But can you explain how this yield curve stuff is going to factor in, or is that just, not even our biggest concern? The inverted yield curve and how it's predicting another recession. How do you think that factors into whether the Fed raises interest rates? Do you think that the Fed is going to continue to raise interest rates? I'm asking a few questions here, but maybe just exploring it from in those terms, in terms of the inverted yield curve and the raising interest rates. How do you think that factors into the coming collapse?
Okay, so the yield curve, inverted yield curve, it sounds like a bunch of gibberish. But what happens with an inverted yield curve is, the rates are supposed to be lower, for less risky debt. Like a 1 month debt is supposed to have a lower interest rate than, say, 10-year debt, because you have a higher chance of getting your money back, at 1 month. And then if somebody's messing with it for 10 years, you might lose it. So you pay a lower interest rate on the short-term debt and a higher interest rate on the long-term debt, which is higher risk. If that's messed up because the Fed is, whacking around with the monetary system because they're controlling it by buying and selling different, securities, different maturities, they can invert the yield curve, at which point, you'd have interest rates higher for short-term debt and lower for longer-term debt. But what does that mean for banks? Well, banks, their business model is they borrow money short-term at lower rates to lend it out long-term at higher rates, and then they pocket the difference. If they can't do that, they can't expand the money supply. The money supply falls. Then there's a dollar squeeze, and then everyone that has debt that needs to service it, that can't service it, goes bankrupt, and then you have a deflationary crash, right? So then at that point, where an inverted yield curve, because the banks can't create money on a borrowing at higher rates and lending at lower rates because they would lose money doing that, so they just stop doing it. Then there's no more money entering the system. The money supply shrinks, and then deflation happens, and the Fed freaks out and says, okay, we'll give you all the dollars you need, and we'll push interest rates down again. That's what they'll do. They'll do it one more time. They'll need to print so much money to force the yield curve back into a positive spin that the dollar will just collapse. So that is the final financial crisis. So the Fed will keep raising interest rates, and they will keep the yield curve inverted to stop the money supply from growing, which is eventually what mitigates inflation in the short term. they'll keep doing that until they see another banking collapse, and then they'll change their minds and go right back down to zero, and everything will just go, and that's it.
I'm not sure how much you know about oil prices and how it pertains to the managing of inflation, but it seems that a lot of the inflation right now is being suppressed by oil prices that have been eased up on as a result of the depletion of the strategic reserve. And I noticed in the last few weeks, they're starting to fill up the strategic oil reserve again in the United States, but the price of oil is going up again now. So it almost makes me wonder if they know that the bottom is in on oil, and that's why they're filling it up again. Maybe they're going to try to, run it dry in the run up to the election. Like maybe they're going to reverse course again and, try to suppress inflation that way. But it seems like inflation is being artificially suppressed in a lot of ways by using these types of tactics, because of course energy is like one of the prime drivers of prices. So if they can, use that strategic reserve in order to keep oil prices down, the price of everything is artificially suppressed. But now, in just the last few weeks, it's starting to slowly tick up again, which tells me maybe the bottom's in and, oil is going to skyrocket again. Who knows? Any thoughts on how the underlying commodities play into this whole thing?
Yeah. Well, look, the Biden administration has eaten into the Strategic Petroleum Reserve at all-time record rates. It's obvious why they did that, because if they're going to go to a proxy war with Russia and oil is going to go crazy, then you're going to want to sell oil into the system to try to buffer that shock. But that's a temporary thing. I mean, you can't control prices forever, and oil is going back up now. Maybe they're buying now because they see a bottom, but so what? There's not that much oil in the Strategic Petroleum Reserve. Most of the oil that we get is still from outside sources, and this will deplete. It's like I said before about gold. Like, I don't care how much gold they have as long as they don't have an ability to steal from me through the inflationary process. Like, I don't care how much oil they have, because it's a finite thing, and when it burns off, they can't magically create more. They'll have to buy it. So like, all the oil that they're buying is going to bring prices higher up faster than they otherwise would if they didn't have to buy it, and they wouldn't have had to buy it if they didn't sell it in the first place. So everything evens out in the end, right? Either they don't buy more and they keep it low, or they buy more to like push the price down later, but like then they have to refill it again. Like, they can. It's a cat and mouse game. It's all a zero-sum game. It ends in the same way.
Exactly. And so you think that the most likely scenario is they'll keep raising rates in an attempt to combat, and that will lead to more collapse in the banking system? Or do you think now they take their foot off the gas?
They might take their foot off the gas, like for one quarter or one FOMC meeting, and they say, "Oh, we're going to hold now," and but there might be more rates more hikes in the future. I don't know if they'll keep hiking, but already where we are now, if we stay where we are now at 5.5%, the system is going to collapse because the money supply is not growing; it's shrinking. We're actually now in a deflationary environment where, by deflation, inflation, I don't mean consumer prices. I mean the money supply, the dollar supply more accurately. So that's been falling since April 2022. And in the most deflationary deflation that has ever existed, following the most radical inflation from the printing of 2020 and 2021. So even if they don't hike anymore, the rates are still high enough to suppress monetary creation to the point where there will absolutely be another banking crisis. And that is going to lead to the next round of printing. So we're already there. It's just how much reserve fuel is in the tank to burn up before we hit a wall.
Do you think this war is somehow related to their knowing that the situation with the financial system is untenable, and this is kind of like a distraction? Or I hate when people say, "Oh, just a distraction," because of course that conjures up all kinds of conspiracy theories. But do you think that the war is related to the collapse of the financial system?
Yeah, I don't know exactly how. When I try to imagine myself as a fly on the wall of whoever's discussing these things, should we go to war with Russia? Should we not go to war with Russia? Um, I tend to like just assume that it's just base human emotions and nothing really that intelligent going on there. I mean, you could say why did Bush invade Iraq in 2003? Well, I don't know, probably because he wanted to make his father proud. I mean, that's probably what it was. And it finished the job his father started so he could go home and like get his father's approval or whatever it is and kill a million people in the process, whatever. So what do I think is happening? I think there's just these people that are bored and they have a lot of power and, they want to do something cool. So like, why don't we just like start a war with Russia and show everyone that we're saving the world and like be really cool. That's not how they're phrasing it. They're trying to put it in more, diplomatic terms where they can imagine that they're very important, but they're just a bunch of, children with guns and hammers and they want to use them because it's cool. That's what I think it comes down to. And maybe I'm oversimplifying it, but maybe I'm just burying, I'm just like ignoring the top layers and just going into like a Freudian explanation, but I don't think it's anything more than that.
Yeah, I mean, I think some people might overestimate their ability to collude and conspire, but I think they, maybe they're slightly more intelligent and driven than that by long-term motives. Because like when you look at the U.S. being a global reserve currency, and now you have the rise of BRICS. I know you have opinions on that with respect to how their currencies are all derived from the dollar, and maybe you can explain a little bit about that. But it just would seem like the war, if I was to look at it, try to marry those two things, geopolitics and the economic situation in the United States, it would almost seem like they're trying to, their way of trying to maintain global financial hegemony is to try to take out Russia and China and try to at least delay that by trying to collapse those economies. Maybe you could talk a little bit about, and I won't keep you for much longer, because I know it's getting late there, but just a little bit about how BRICS and maybe the geopolitical thing ties into this from your perspective.
So BRICS, I don't think it's completely insignificant. I think it is a significant event that a group of countries is coalescing around a shared hatred for the dollar. I don't think there's much that they can do about it or really want to do about it, because the only way to get around the dollar is to go underneath it in the pyramid that they are part of. And the only way to get underneath the dollar is to go to the actual money, which is gold. So if the BRICS want to trade in gold, they can collapse the dollar for sure. I don't think they want to do that, because what they really want is the ability to inflate, just like the United States has. And they are not going to be able to get that until the dollar collapses. And then in such a world, they'd have to build up their economies through liberty, just like America built it up since 1700s through liberty and free markets and gold and silver money. That's how they became the most powerful country in the world. So it's not like America collapses and then everything goes to China, because now America's gone and then China is the most powerful second in command, and then all the power goes to BRICS once America's gone. That's not how wealth is created, right? America and China and the BRICS countries are still in the same soup, the same weave, the same economic system, where the two biggest trading partners in the world are America and China. So like, what's the logic of okay, so the deep state is talking in some room somewhere and saying we have to go to war with Russia so we can dethrone China and mess up their economy so that we stay the most powerful country. But like, where's all this stuff that Americans are using coming from? Like the sky, it's coming from China. So you want to collapse their economy? Then you have to starve. Fine. Try that. See what happens. Like, it's also silly. I don't see any logic to anything that's going on. Like, if you want to be prosperous, then let people produce stuff. I mean, it's really not that complicated. And once you get onto this whole chess game, it's like a suicide chess game. Like, who's going to win suicide chess? But the one who wins suicide chess loses. So like, what are we even talking about? This is how it may be different from how your audience sees things. I can't wrap my head around this like geopolitical nonsense. Maybe that's my failing. That's just how I see it.
Well, definitely in going to conflict with China, there would be a huge short to medium term effect on our economy, because like you said, we wouldn't be able to get all that cheap stuff from there anymore. Obviously, China is not going to be supplying us with stuff if we're at war with them. But I guess, I guess though maybe the thinking would be that having the dollar still is superior to that in some way, shape, or form. That the bigger, if it's going to collapse, they would rather have our Walmarts collapse than the dollar as the global reserve currency collapse, if that's even possible, if those things are even separable.
You can't separate them. I don't think you can separate them, because in the immediate aftermath of, let's say the U.S. goes to war with China, they cut off, it's an embargo, no more Chinese goods. Then like the supply of stuff going into America really contracts. In the meantime, they're printing a bunch of dollars to go to war. That's a hyperinflationary setup. So the dollar is not going to die as the world reserve currency in the global trading and forex trading markets. It's going to die in the streets of the U.S. It's going to die when, somebody can't buy a stick of gum for $100. That's when it's going to die. So either way, like, go to war with China, it's going to destroy the dollar. Don't go to war with China, the dollar is going to destroy itself. I don't know which path to the end is longer. Maybe they're going to pick the one that's longer. I don't even know which one's longer. But the path is short either way you take it. I just hope we take the path that the least amount of people die.
Yeah, well, if what you're saying is true and we take the Freudian explanation of things, then, all bets are off. Anything is on the table. The height of stupidity is very high. So, I'm not too optimistic about how this is all going to play out. I do think that, like you say, it's better if it happens sooner than later. It's better if a bubble pops now than 10 years down the road. So, I would encourage people to look into what we've talked about today, and it seems so obvious. A lot of people, unfortunately, will not be motivated to take this advice until the day before or the day or right at the moment, and that's when everybody is going to make it. And it seems like right now is the best time, when there's not a lot of crisis in the markets. That's how you play the long game. And if we presume that it's inevitable that things go back to the gold standard, because that's what everything is built on, then it's only prudent to, at this point in time, at least have that 1/30th of wealth in gold and silver. But that's not financial advice, so don't do that. But, talk to whoever your financial advisor is about that. But any closing thoughts on what we've talked about today? Any other things that you would like to advise my audience on before we bring this interview to an end?
Yeah, look, we're talking about heavy stuff. It's good. Things are going to get heavy. Things are going, and we all lived through the last 2 years. And in my life personally, it was a very trying, chaotic time where I had to defend my children, I had to defend my family, and for the first time, it really hit me that, let's say, from 2008 to 2020, I was like, yeah, well, at some point the monetary system is going to collapse, and I'm going to have gold and silver, and I'll be rich, and then I'll take care of my immediate surroundings, and everything will be okay, and then I'll move on with life. And I wasn't really thinking about the horrors of what's to come. But then 2020 happened, and then, like, bam, like, my family's under attack for certain medical reasons, and I'm being ostracized, and, like, horrible things are happening, and I'm seeing Holocaust type patterns in division and hatred and fear mongering and this crazy behavior. And for the first time, I understood and I realized, like, this is going to be a lot harder than I thought emotionally, and this is not going to be fun. But at the same time, as it falls, it's going to be a cathartic process for all of humanity. We're going to come back to what's real. We're going to come back to what matters. And we're going to have to abandon a bunch of, the crap that we've been addicted to as technology has gotten more unwieldy and complicated. And we're going to have to go back to our local communities and build actual relationships with other human beings and make communities. So, the preppers, again, the bona fide preppers like you and your audience are going to have to team up with the monetary preppers like myself and the stackers. And together, I really think that we can make a better world out of the wreckage that's going to happen. It's going to be hard. It's going to be a catharsis, and it's going to be the most meaningful years of our lives, I think.
Awesome. Well, there is a silver lining, a gold lining, perhaps, as you say. Let's hope. And it's been great chatting with you today, man. It's been, I've used this word way too much, but it's been fascinating. And I look forward to having you back at some point in the future. I would strongly encourage people, go check out Rafi's channel. I'll post a link in the description below. You won't be disappointed. How often do you put out content on YouTube and Twitter?
YouTube once or twice a week. Twitter, I usually tweet a few tweets every day. And the Endgame Investor, my newsletter service that you can search for, I put out 3 or 4 times a week with a weekend report on the gold and silver markets and the interplay with the banking system from an Austrian School of Economics perspective, all logically based and meant to calm people down emotionally who are traders or not. I make it fun.
All right. Well, guys, links are in the description below, and thanks for coming out.
Thank you for having me, Nate.
The best way to support this channel is to support yourself by gearing up at CanadianPreparedness.com, where you'll find high-quality survival gear at the best prices, no junk, and no gimmicks. Use discount code PREPPINGGEAR for 10% off. Don't forget, the strong survive, but the prepared thrive. Stay safe.